Hello, this is Kirill from forexboat.com and welcome back to the course on Forex trading. Today is going to be a very exciting tutorial because we will finally get to open our very own first real Forex order. That's right, I will be trading with real money right in front of your eyes. As you can see here, I've got a real Forex account open with Alpari and I have $500 on that account. On the left in the market watch, we can see that the market is fired up. The currency pairs are rapidly changing in prices, and in the middle here we've got the euro-dollar 4-hourly time frame. We're going to open our very first order on the euro-dollar. I have already outlined some things on this chart and we'll quickly discuss them before we go on to opening our very first real Forex order. As you can see, the price on the euro-dollar 4-hourly time frame is currently in a downward sloping channel. So the borders are marked with these outer two yellow lines. The middle yellow line marks the middle of the channel. The price first entered the channel over here at the beginning on at the bottom border. Then it hit the top border a couple of times, hit the middle, hit the top border, went down, back to the bottom border, crossed the middle, went to the top border. Now it's just touched the middle. And guess where it's going to go next? That's right, it's going to go down towards the bottom border of the channel. So a couple of other things. Right here I've got some prices marked out. The green price is approximately the current price of the euro-dollar. It's a bit higher than that currently. It's at 1.24319, so basically nearly 2 pips above that. The blue and the red represent where we would want to set our take profit and stop loss levels. So as you can see here, I've set the stop loss just above the top yellow line, meaning the top channel border, and that's because there's a good chance that the price will bounce off, and we'll give it some extra leeway in there because just in case it does cross the border a little bit, so we're on the safe side with our stop loss. Also, this red horizontal line represents a very strong psychological level of 1.25000 US dollars per euro, and that means traders will try to sell at that level, which will help us drive the price down. Also, we could potentially put the take profit even lower, closer to the bottom border, but I didn't want to make the take profit much larger than the stop loss. In this case, our take profit is approximately 140 pips, and our stop loss is about 130 pips. So that's about even, not exactly, but about even. You could, if you wanted to, set the take profit a bit lower, but we'll go a bit conservative and stick to this take profit of 1.22900. Also, an interesting fact that I noticed is if we go zoom out a little bit, you'll see that we are in a downward trend, so we are trading along with the trend, which is good. And an interesting fact, if we extend this channel line, you'll see that the price actually touched this line over here. So it is a diagonal resistance line for this trend, and that's also a good thing for us. It means there's even a higher chance of the price bouncing off this line when it gets to it. And that's exactly what we want. So now that we've identified the direction of our trade, where we want to set our take profit and stop loss, the last thing that we have to do is understand what volume we can assign to this trade. And in order to do that, I'm going to quickly bring up a slide that we're already familiar with. To calculate volume of a trade, which is X in this equation, we have to divide the risk in dollar terms by 10 multiplied by the stop loss pips value. Here the stop loss pips value is at how many pips the stop loss has been set, and risk in dollar terms is the amount of money that we are prepared to lose if this is a loss trade. So in our case, let's assume that we're okay risking 10% of our balance. 10% is quite a risky approach. However, in our case, we've got a very strong resistance line. We've got another psychological level on our side, and so it does look like a good trade, and hopefully the euro dollar will go downwards and reach our take profit. So I'm quite comfortable at setting this risk level at 10%. Our balance is $500. 10% of $500 is 50, so we replace 50 in that equation. So the last variable that we have to input is our stop loss pips, and as we discussed, stop loss pips is 130, so I'll just put that in right now. And now I'm just going to bring up the calculator so we can work this out. So we're going to do 50 divided by 10 times 130, and that gives us approximately 0.03846. And of course, in volumes, in lots, we can only use 2 decimal points. Actually depends on your account, but on this account it's 2 decimal points. So we're going to round that up to 0.04. So I'll just type that in here. Equals 0.04 lots. Perfect. Now we can go ahead and conduct this trade. Now we're going to click this new order button up at the top here. And in these boxes, we're going to specify all of our parameters. So it's 0.04 lots. Stop loss, we're setting at 1.25600. Take profit, we're setting at 1.22900. That's the blue price over there. The comment is going to be my very first FX order, exclamation mark. And this is going to be a sell order, so we click sell, and there you go. The order has been sent successfully, executed, and it's got a ticket number. It's a sell order at 0.04 lots, euro dollar. That's the price at which it was executed. Stop loss and take profit just as we specified. So that's perfect, and congratulations on that. That's a very big step, very big first step in your Forex trading career. So I'm just going to click OK here. As you can see, we've got new exposure to the euro here. It is negative because we conducted a sell order. Here we've got some information on the margin and what's going on with the equity. Now if we move to the trade tab, you'll see your order here. So that's the ticket number of our order. That's the time when it was open. That's the type of order. It's a sell order. Size, the volume in lots, 0.04. Symbol is euro dollar. The price is that's the price at which the order was open. Stop loss, take profit as specified. This price is the current price, commission, taxes, and swap. And our current profit's a bit negative. That's because of the spread. Here you've got information, equity, margin, free margin, and balance. So that sums it up for today. We're going to leave the order for a few days and then come back and see how it went. Hopefully it would have closed at take profit by then. Thank you very much for your attention today. I look forward to seeing you next time, and until then, happy trading.